if I was a four-legged animal, I have 3 feet now. I'm 8 years in Dallas. I have 3 feet firmly planted in Dallas.
Yeah.
Strong, and I got 1 foot in New York. And it's really in New York because of my family and my best friends, as opposed to where I want to be.
Where would you want to be if it wasn't for your family and friends?
Certainly at this point in my life in Dallas.
Really?
I'm not, because I don't have family there, it's not the place I'll retire.
Yeah, it's not home.
Right.
But I love Dallas. I think Dallas is awesome.
So you actually think that it's an easier way of life, or it's more dynamic, or it's more?
Well, I wouldn't say dynamic. You and I were talking earlier.
Yeah.
I would say that if you looked at musical notes on a score, you would say New York has 15 musical notes in terms of its culture and its vibrancy. And if you said Los Angeles, you might say 11. And if you went to Austin, you might say 8. And if you go to Dallas, it's 4.
Yeah.
So dynamic isn't the word I would use to describe it. But I do think it's not just the daily grind.
Yeah.
And the difference in the daily grind and the quality of life is profound between Dallas and New York. Yeah. But it's really, you're in the center of growth and opportunity in America.
Yeah.
And I think years ago, I felt that way in New York all the time. And then the global financial crisis happened, and I think culture changed.
Yeah.
And I think politics changed, and the framework around business and opportunity. And I think the epitome of what changed was when AOC relished in not having Amazon, located second headquarters. And that has become largely the extended culture in the area, and that's sad.
Yeah.
Versus in Dallas, you are in this epicenter of nominal growth in the United States. And it is clear by any metric one would look at that over the next 30 years, Dallas will become, the epicenter of business in America.
Well, it's all we talk about. We laughed. We for one episode, we talked about Y'all Street for like 30 minutes. So what are your thoughts on Y'all Street? I mean, everyone's talking about Dallas being the next
they're building the exchange.
Wall Street.
So
just the other night, Jim Lee, the CEO of the Texas Stock Exchange, came in and spoke to a small group of us very clearly with respect to the value proposition for the Texas Stock Exchange. And it is compelling. I mean, there are 17 exchanges in the United States today. The 2 biggies are NASDAQ and New York Stock Exchange.
Yeah.
And each one of them has a different value proposition. But if you listen to Jim talk about the value proposition to companies that either list or dual list, it is a compelling value proposition.
In a nutshell, what's the impetus for his exchange?
One, there's a
regulations.
There's a regulatory framework that the state of Texas and the exchange can deliver. There's a technology efficiency and effectiveness because it's all the brand new technology.
Sure.
So it allows for more efficient and effective.
And with corporate litigation too now, I mean, Delaware's always been a big spot. That's why everyone's incorporated in Delaware. Well, there's a new Texas court system that just opened up that's
is that right?
trying to compete. Yeah.
And there's around the business judgment rule for directors as to what the standard is for Texas versus other states.
They seem like they're doing everything right in Texas, and certain states, New York, California are doing everything wrong.
All right.
I think a lot of
before we
people,
go,
I think a lot of people, I would never use the word everything. And I think it really depends upon your seat because I do think I have a good perspective on America, spending my life in New York, but being in Dallas 8 years. And I understand when people say, but this is wrong with Texas. I understand, no place is perfect by any means. But if you step back, just you are a person of commerce, you are focused on business and opportunity in America. Yeah. While it may not be everything, they're certainly doing more better than most places in America. And I think you're seeing it in terms of the sucking sound of commerce that is coming into the
But there's not great Italian food in Texas still, right?
Now you're teasing me.
Yeah, I know. But there's Carbone. There's a Carbone in Dallas.
So Carbone opened in Dallas, which is great. And what I'm really excited about is literally right downstairs from my condo is a new Avra that's opening up, and we'll have the first good Greek restaurant in Dallas. So
see, things are happening in Dallas outside of business.
That is a big tide change. That's a big tide change.
It is. Yeah. It is terrific as a New Yorker to have good, a place for good Greek.
Not to harp on the Texas Stock Exchange, but is there a sense that the other companies coming to Texas right now, or like maybe CEOs of other major organizations, does it feel like the ones who are going to list are preparing to list on the Texas Stock Exchange?
I'm not close enough to that. Look, they've just been capitalized. They're seeking SEC approval. They're just beginning their journey.
But they have some big backers, right? I mean,
they do. Sure. I don't know what's public and not, so I won't say.
Before we go down the Crow route, we started talking about it. So you're a New Yorker. So where'd you grow up, you said?
I grew up in Nassau County and largely Port Washington, which is the North Shore, exit 36. and I graduated from public high school. And then I wound up going to college in New York City at NYU, and I wound up going to law school at Brooklyn Law at night.
Now, why law school? Why did you choose that route?
Oh, because, I got done with college and I started a small business with a friend of mine and realized how little we knew. And I was kind of fearful about the future. And I said, well, I'll get some kind of graduate degree. It'll give me some insurance in life. And I figured an MBA would be duplicative of what I had done undergrad. I was a business major at NYU Stern. And I figured law school would give me more optionality in life. I had no burning drive to be a litigator, for example, but I figured it would just make me better, brighter, faster, and smarter. And there's no doubt it was going through mental boot camp. It was, one of the most formative experiences in my life. I'm thrilled every day that I did it. And
were you a big reader prior to law school?
I wouldn't say a big reader. And underneath your question is, if I knew I was going to law school, I would have been an English major, not a business major.
Yeah, totally.
At all at school, I never applied myself the way that I could have, but it was never, super challenging and that I struggled with it. So I got through that program, pretty well. Enjoyed it tremendously.
So then how long, post Brooklyn Law, did you go down corporate law route?
Nope. I was working as a legal assistant during the day at Prudential Securities while I went to school at night. And I talked my way into a job in their investment bank. So I took the bar exam on a Wednesday, Thursday. And then Monday I was in training with, MBA students from schools. And I figured out what this thing called Lotus 1-2-3 was, which none of you know, but that's the precursor to Excel.
Of course it is.
Post-slide rules.
I mean, of course it is. Like, you have tons of experience.
So the reason I know, all right, I don't want to go down a whole Excel route, but the reason I know is because the guys who were trained on Lotus start every equation with a plus sign.
Yeah.
So if you see the plus sign in the beginning of a formula, it's like, you get some
Lotus guy.
You get some legacy.
Yeah,
I know enough. I know enough to be a weapon. So you go to Prudential, you start through this MBA course, and then where do you
dropped
place?
me in the real estate group because it was August 94 and Wall Street was bailing out Main Street. It was the first wave. It was the UPREIT that had been invented in 91 by the folks who took Kimco public. And it was blowing and going, and Prudential was a large retail distribution system. And back in those days, REITs were distributed to retail investors. So we were working on an IPO or a secondary or a bond offering or an M&A trade every week. And it was an awesome experience as a young person getting up the curve. And then after 2 years, I got a bid away to go to Salomon Brothers, which I viewed as a better brand, which, I realized pretty quickly in that business that stuff mattered, particularly back then. And as soon as I got Salomon Brothers, within the year, they got gobbled up by Smith Barney. And within a year, they got gobbled up by Citigroup. And then I left to Morgan Stanley, where I was in the real estate group. And I worked there for almost 20 years.
Wow.
Yeah. And then when did you go to Dallas?
8 years ago is when I started with Harlan. And
who set up that introduction? How did you get in touch with him?
I met him 10 years ago through a recruiter that he had hired. He had decided that he wanted to begin his transition into retirement and wanted to bring in someone who had perhaps a different background. And we talked off and on for a couple of years. And then I went down in the summer of 2016 with my wife, and we looked at each other and said, we got to go do this. And it's been a love affair ever since.
It was just too much of a phenomenal opportunity to turn down, basically. Or did you like Dallas when you visited?
My heart pulled at me. My whole career, I'm sure like you guys, particularly when you work at large financial institutions, there's generally a bid away for your talent because you're so exposed to the market. Mm-hmm. And I had always looked at job opportunities from the perspective of an analytical approach. How much money do I make? What is my authority, my responsibility? What is the scale of their business? And when I met Harlan in the Crow organization, my heart called out and said, I want to be part of these folks.
What was your, what did you, going into that, what were your impressions or thoughts of Crow and of Harlan? And how did that compare to your takeaway after you left meeting Harlan for the first time?
I didn't know what to expect. I had been to Dallas so many times professionally. But when I showed up for the first time and I pulled up to this amazing complex called Old Parkland, which really is almost jarring in terms of your expectations, I was like, wow, this is a different kind of place. I don't know what that means, but it's a different kind of place. And when I met Harlan, I was immediately surprised at what a considerate, benevolent, thoughtful person that he was. I grew up in New York dealing with the New York City real estate crowd. You would imagine my perspectives on that, and I found a very different man who was not interested in talking to me about, the deals I worked on, but was interested in talking to me about who I was as a person in my life. And
tell us about Parkland, Old Parkland, because this is a really cool complex that almost feels like a university setting. And I think for a lot of our listeners, they'll have no clue. They don't even know what that means.
It's very difficult to describe. I would say for your listeners who might know at least anecdotally, as Sand Hill Road is to investing in Silicon Valley, Old Parkland has become that to principal investing in Dallas, Texas. It is the site of the first hospital for the city of Dallas, originally built in 1894. In 1911, the buildings burned down, and in 1913, these gorgeous, beautiful brick buildings were built, and then a whole hospital system was built around that. It was shut down in the 1950s as an operating hospital, and it languished in a variety of uses. And the part of town that it was in Dallas by the 1990s, 1980s had really become a rough part of town. And so it was shuttered up and vandalized and graffiti strewn. And in 2005, Harlan acquired the site because the building was beautiful, and he had decided at the time, I'm going to just take the main building that was beautiful. A lot of the buildings weren't beautiful. I'm going to take the main building. I'm going to completely renovate it. And it's going to be my office campus for my team. And then the rest of the land, it's on a 14-acre site. We'll figure out over time. We'll sell it off. We'll do what we're going to do. Well, what started with I'm going to build my office building has now become 12 buildings across. I think now it's 18 acres, give or take. We acquired some additional land. It's about 750,000 feet spread across these different buildings. It's a gorgeous physical complex that looks like a university campus.
It has real character. I mean, unlike, every other new office complex in the country, this place has just a lot of charm. It's very cool.
And I think we're on a real estate podcast, so your listeners are interested in real estate. We all know when people use the word placemaking, right? Well, we think we know what that means. Well, we have all the elements, traditional elements of placemaking. We have the right location. We have a physical building that's beautiful. We have all your traditional amenities that you would have in that. But what we've curated over time is the tenancy. It's virtually all principal investors, family offices, foundations, private equity firms, hedge funds. So the tenancy is like-minded principal investors, and I think that's critical. But the real differentiating factor that you can't replicate anywhere else in the country is the delivery of intellectual content. Old Parkland is part museum, it's part office campus, and it's part a center for discourse and debate. And the speakers that we bring in, the debates that we have there, the events that we have there, are really compelling international and national figures across politics, business, art, science, sports. We had Bill Belichick down there not too long ago, very well attended. And the tenancy in our campus has access to these events, whether they're small lunches or big auditoriums, on a consistent basis. And that last piece of the puzzle makes Old Parkland unique in America.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Graysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com. It's very cool.
Yeah,
when we met in the original Old Parkland, where I think your office is, and we were in that room with the fireplace and the wood paneling walls, I felt like I was taken back to another time, right? Like just you almost want
in a good way.
In a good way.
Say in a good way. Yeah.
You almost want to have like a scotch and a good book.
We can do that.
Yeah, let's do that.
And if you'd like a
next
cigar,
time, let's
we can do that as well.
So it's super cool. It's really
awesome.
Cool.
So Michael, so you joined Crow, right? And what was this is going to be a lot to unpack, but what was your impression of what they were doing? What did you see as their future? What were your initial thoughts kind of in your first inning there?
Throughout my whole career, even though I didn't really touch much, the old Trammell Crow folks or Crow Holdings or the enterprise, one of the first deals I worked on at Prudential Securities was a transaction for Crow Holdings. It's neither here nor there, but I knew of the brand, I knew of the alumni, I knew of the reputation, I knew of the history. And so you asked me what my thought was. Well, first was, my goodness, I can't believe they're allowing me into this club, was my first reaction. The second was, from a pure business perspective, the company, because of the challenges of the S&L crisis, the late 80s and early 90s, it took a step back and had to be restructured, and Harlan did amazing work. But it had not regrown. It had not absorbed the scale and scope of its brand, of its alumni, of its reach, of its access. And from a pure business perspective, I thought that was a good business opportunity that we could support the growth and development of the firm, sitting inside of all of that rich history that's been earned over multiple generations, and I could benefit from that. And I've watched it now twice in my career. One, I had the privilege of growing up at Morgan Stanley Real Estate, and that has become an amazing alumni network, and the reach and the access and the goodwill that those people can provide to you in doing business. And it's the same thing at Crow. The reach and the access and the goodwill that we have provides more business opportunity. And so I saw that as a business opportunity for me to participate. I didn't know exactly what that meant, but there was no business plan that I sat there with Harlan and said, okay, we're going to do the following things. But I had a gut instinct. And I don't know how many times in one's career they have that type of opportunity. And I wanted to go do that with these people.
Well, Crow's been very prolific in real estate in the country. I mean, probably one of the most influential real estate companies I can think of. And I think a lot of our listeners may not know this. I'm going to read off just a few companies that spinned off from Crow, or folks who had left Crow to start these. And tell me if I'm missing any, but Stream Realty Partners, Granite Properties, Lincoln Property Company, Billingsley Company, Wood Partners, Mill Creek, Alliance Residential. I mean, these are some very influential.
Avalon,
it goes
Gables,
on. Yeah,
there's something to be said about that.
Trammell
right?
Crow Company out of C.B. Richard Ellis. There's others. I can't keep track.
Yeah. It's wild. It's quite a legacy.
All of that is about a spirit. It's about a culture. Some of that occurs during difficult times where spinoffs occur because there's restructurings and people go their own way. Some of that occurs during good times because underneath it was Trammell's vision, and it's Harlan and the Crow's family vision. Yeah. The responsibility of the family is to create opportunity for the people that work here and partner with it. And that's really what drives, as opposed to trying to control it all from the center. It's really to create opportunity, and people grow and evolve, and sometimes they want to do their own thing. And so it's working with people to facilitate their hopes and dreams and ambitions. And that goes back 77 years.
What do you think? What do you think it is about Crow that all these groups go off to do some pretty impressive things? Like, is there just a certain entrepreneurial spirit?
I think but I think it's what I just said. I mean, how many companies do you know, right, operate that way?
Yeah.
How many families or companies that when they look at the earnings of the company and they look at a guy like me, they're not saying, well, what's the budget this year and we missed earnings by? I've never had that conversation, ever. How many organizations in this country of any scale? I mean, if it's two you guys or it's a small room of people and you're mission driven, and I have that. But as you scale up, you tell me what private equity firm owns a business that looks at it that way.
Right.
What public company operates that way? How few family-owned or private-owned businesses or partnerships operate that way? And when you go at business through instead of scarcity, from a perspective and a spirit of plenty and a spirit of sharing with the people that work there, you foster a different engagement with the people that work there. You ultimately attract and retain people focused on that. And that's the difference, I think.
Yeah. Let's talk about some sectors that you're very involved in. I mean, multifamily, industrial, I know are two real key sectors for Crow. Tell us what you're focused on right now, and where what you're working on.
Look, today in America, obviously multifamily and in terms of the core food groups, multifamily, industrial are the belle of the ball and have been. And so I'd say from our company, that's not something we've chased in response to the shifting asset allocations of the past decade. I'll answer your question from two perspectives because I think we have two distinct real estate businesses. We have a real estate development company and we have a real estate investment management business. And those are two different businesses run by two different teams of people. With respect to the real estate development business, that's a national business, 20 offices across the country, very local, folks with hard hats building buildings. And we have been the largest multifamily developer in America for now 45 years. And so we are focused on that, and we will continue to focus on that as that opportunity evolves. And today in that business, we're doing more workforce level than we are doing luxury level. And part of that was very deliberate by the firm to try and attack and approach a problem in America. And part of that's been just where the demand is from both investors as well as tenants. With respect to the industrial development business, we started as an industrial developer in 1948. That was our first thing that we ever did. We still own the first speculative industrial building that Trammell built down in Dallas, which is pretty cool.
And he was like a pioneer in that space.
He was the pioneer.
Yeah.
He certainly was a pioneer in that space, and he had built a building that was half pre-leased and half speculative, and it was successful. And so he built another one speculative and another one speculative, and before you know it, he was dominating the speculative industrial development business in the United States. We remain today one of the larger industrial developers in the U.S. We're active in about 10 major markets across the country. And we had been, so I'm going to finish off with the development company. We had been out of the office development business since the 1990s when we, I think with spinning off Trammell Crow Company, and even before then, we had kind of exited building new office buildings. In the teeth of COVID, we restarted an office development company, no matter what the perspectives are on the asset class, and we can talk about it and the challenges and the very real challenges. One way or another in these growth cities in America, pick a city, Nashville, Austin, Tampa, Dallas, companies are moving in droves and they're going to want the Class A plus brand new modern collaborative space. And so we started that business with a small team, and we recently completed building the largest mass timber office building in America in Frisco. It's now fully leased and very successful. And obviously our office campus continues to expand. And so we see an opportunity in the office sector, perhaps not the type of national in scale or scope that our multifamily or industrial businesses today, but those are the three things that we're focused on as a developer.
You seem like, you're at the forefront of things. When you're going into a new project, it seems like you're being very thoughtful. The mass timber project, I've never seen anything like that until that was announced. I remember when it was announced that was going to be developed. I guess much more energy efficient, much better for the environment. Tell us the rationale behind that project.
There's a number of value propositions in using mass timber, and for the audience, it's compressed laminated timber. So instead of steel, you're using wood, and because of technology and changes in regulations, you can now build big, tall buildings. And so the appeal is they're physically beautiful. If you go into them, you're seeing all this exposed, beautiful CLT, and that matters in the space. The second thing, of course, they trap carbon as opposed to emit carbon, and so that is attractive to people as they think about their sustainability objectives. Thirdly, they're faster to build and put together than traditional steel activities. And then the fourth piece, which depends upon where you're on the cycle, is cost. And because we started it in the teeth of COVID, we bid out the job before costs had run. There's a limited supply of this CLT in America, and we were able to do it at a moment in time. If we had bid out the job a year later, it would have been substantially more expensive than steel. So for us, that entire value proposition came together, and it was attractive. And the last point, we built it in Frisco, Texas, arguably the fastest nominal growing corporate market, and it's all worked out great.
Will there be more in the pipeline?
Yes, sir.
Okay.
Yes, sir. We're working on the second mass timber, plans for that second mass timber building as we speak. And doesn't mean we'll only do mass timber, but our Old Parkland Campus, we just expanded that 300,000 feet. That's brick and steel.
So first off, it's so shocking to look at the numbers and then to remind yourself that this is a private company. This is not a publicly traded company. And you're talking about, I'm a multifamily guy. I think like 300,000 units have been built, I think, of apartments, maybe more than that.
Something like that.
Yeah,
Something like that.
it's just a phenomenal number. But I'm curious, like, where you see multifamily going. Like, let's talk more about multifamily. What regions are you focused on?
Yeah, where are you most active in multifamily right now?
I will answer your question. I just want to give the audience another perspective as I drill into that. In addition to the real estate development business, we have a real estate investment management business that started with a fund, our first fund in 1998. And so there's a team of 100 people in Dallas, Texas, who are investing through funds under a range of strategies across the United States. And so we both acquire multifamily and provide capital to other multifamily developers. The competitors to our multifamily development company, we are their partners as an investor. We do the same in industrial, where we both acquire and provide capital to other industrial developers. And then we also, as an investor, pursue a number of other niche sectors, such as self-storage, convenience and gas, manufactured housing, student housing. And so we have a lens. In addition to being the developer, we have a terrific investment team with a great track record. And so when you ask my perspective on multifamily, I can give you a perspective shaped by a point of view as a developer and a point of view as an investor. So I just wanted to make that clear.
No, that makes sense.
That's great.
Yeah, makes sense.
What I'm seeing in the multifamily space is at this moment in time in general, first of all, it's such a localized, regionalized business that making blanket statements is often difficult. But in general right now, we're going through a delivery supply glut. Something like 600,000 units were delivered this past year. Even though absorption is one of the highest on record ever, we're going through a moment in time where those markets that had been delivered a lot of supply, places like Nashville, places like Austin, are going through some stress in terms of rents down 5% or down 8%. They have not collapsed by any means.
Yeah.
In other markets, rents are, might be flat, they might be up 3%, they might be up 5%, but in general, what you're seeing, therefore, is investors less active in new development. Not active in new development, but they're sniffing around. Maybe there's going to be some distress or some better pricing because of refinancing pressures. What's the underwritten return on a value-add acquisition versus a development? Is there enough of a spread? And I think the equity markets right now, I think you were at NMHC, and so you really can get a pulse on it. I think there's interest, but people are waiting maybe 6 months, maybe a year, not everybody. And I would also say to you in terms of new development, we're talking quality real estate. New development, the market is untrended yield on cost, 6.5, depends on the market, could be 6.25, could be 6.75. That untrended yield on cost remains relatively attractive to the equity markets versus, where the cap rates are in stabilized multifamily in the quality markets. It's somewhere between a high 4s and a low 5s.
Yeah.
So investors are looking for, let's call it a 400 basis point spread in the IRR between a value add acquisition and a development project. And so there's a tension going on in that marketplace today. In terms of the product that people want, well, one, the people are moving to the Southeast and Southwest corporations, and so those markets remain relatively attractive relative to the rest of the country. States and places where there are big concerns over significant rent control or just cause eviction or other impediments to long-term value creation, some of the challenges that New York City has seen in certain elements. Those are places that I think investors are cautious in right now. But in a year from now, give or take, that new supply delivery is going to start to collapse. And we're going to have to see what happens with interest rates and mortgage loans. But we're at the lowest level of new homes being built in a long time. The volume of new apartments being built is collapsing. And those fundamentals, investors are well aware of. And so I think it remains a really attractive sector.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Greysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com.
It's a very interesting sector, especially the way that you frame it, right? Because nationally, there is a supply glut.
This question about supply glut, I mean, when you talk about the 100% AMI and average median income renter, or the 80% or the 60%, these people in not all markets, but take New York City.
Yeah.
I mean, they're just not building, apartments in the city. So rents keep skyrocketing because there's no new supply and there's continued degradation of the old stock, So you don't have a supply problem in New York City, right?
Yeah.
You have a supply problem, the opposite problem. You can't build here for lots of reasons. And same thing in California, and the same thing in—
I'm sure most metropolitan cities, face that issue. Well, except for Dallas. I can't speak to,
not all in the Southeast
Texas
and Southwest.
is a different animal. Yeah.
But it's a fascinating market. And that's why making generalizations, real estate is a local business.
Yeah.
So and you got to be careful of these generalizations because you'll miss opportunity.
Yeah.
Right.
Yeah.
So
we'll have some episodes where we'll talk about what are kind of generalizations. We'll kind of laugh and be like, it is so dependent on the city and the neighborhood.
Yeah.
But
I mean, when you make blanket statements, generally, I found that the theme is around politics. That's the only theme that really spreads across all the cities. It's a political thing. And then, you have the red state, blue state divide, developers who have already realized what they don't want to deal with, made it out to the red states. And then everybody else is, talking about policy.
Are these multifamily projects, are these usually merchant builds, or are you guys holding now with anything?
Well, I think
on the JV side too?
It's mixed, both on the development side of our business and on the investment side of our business. I think on the development side, the majority of what we do still remains build and sell. Really driven more by our investment partners as opposed to us. We're happy to hold our investments for a long term. We are a very patient organization, and we have, I don't know what the numbers are. I'm not going to say it's half, but closer to half of our multifamily development is going to be in ventures or funds that are long-term holds today. That has changed demonstrably in the past 8 years. 8 years ago, I'd say almost 100% of what we're doing was going to be in build and sell structures through investors on a one-off JV basis. And today, probably, a third of our activity is going to be build and sell structures in one-off joint ventures with terrific investment partners. A third of it's going to be programmatic with investors. Half of that'll be long-term hold. Half of that'll be in sell programs.
What changed?
A combination of our approach, certainly led by our approach, but I think the market as well. Investors were going out and buying stabilized long-term holds. I'm going to make numbers up at a 4 cap. And they were like, well, wait a minute. Instead of me buying at a 4 cap, I'll build it at a 5.5 cap and I will get a better overall return. And so instead of me buying, I'll build and develop that. I think the market moved in that direction a bit. And then we made some changes in the way we engage with investors to have a more objective allocation framework or allocation policy that allowed us to enter into programmatic ventures and funds with investors without fear of cherry picking. And we came to the market in that perspective. And those two things aligned and has created the opportunity for us. But we are very flexible as a developer, and we're happy to work with investment partners on a build-to-sell basis or a build-to-hold basis, depending upon their preferences.
Got it.
We spoke about multifamily. Have you guys expanded into BFR?
We have developed 2 properties, one in Dallas area, one in the Austin area, that have just recently opened. And we are going through the lease-up process right now. And we're learning through that process and our perspectives on the business for the long term. As an investor, we have made one investment at an entity level in a build-to-rent developer operator, but we have not been acquiring one-off properties and building up a portfolio at this time. I wouldn't be surprised if that evolves in the coming years. It's here to stay, undoubtedly, as an asset class on an institutional basis.
Yeah.
I think that makes a lot of sense.
You want to talk industrial? Let's go there because I mean that's your bread and butter initially. right?
Again, national generalizations are challenging to make, but nonetheless, similar dynamic to multifamily in that an excessive amount of supply came on the market. Notwithstanding that, tremendous demand, tremendous absorption. And because of that, if you really looked at the data, particularly on new modern Class A space, rents have held up incredibly well, during the past couple of years. In addition, the new deliveries are because the construction period is much shorter than multifamily, those new deliveries are really starting to collapse. And you're seeing pricing pressure, demand because of demand and supply dynamics rebuilding in quite a number of markets across the country. There are markets such as Southern California that are challenged right now in terms of demand because you had such a pull forward of demand in Southern California during the COVID that tenants kind of got filled up, and a lot was built in the Southern California region. So that marketplace is absorbing that right now. The good news in any of these markets that are oversupplied, new starts are literally collapsing in a lot of these oversupplied markets, and that's going to heal itself really fast. It's healing itself now as we speak. And we have experienced terrific leasing velocity across our portfolio. It's held up this entire time. We don't have big weak spots. We didn't build a lot of the 1 million square foot buildings in areas that are remote. We really stayed infill. We really stayed 200,000 to 400,000 foot, 1 to 4 tenant product within 10 miles typically of the heart of the urban environment. And those have done incredibly well. We're really excited about it. And I say that from a perspective as a developer, where just citing statistic today, the market would be around a 7% untrended yield on cost for it to be attractive and enough of a spread for investors. But as an investor, our investment teams are very active today in supporting the industrial development community and being a great partner in their deals as well. So that's healing. One, I don't think it ruptured as much as multifamily in terms of the supply-demand imbalance in certain markets. At least our experience was that. And two, it's healing fast as new supply tails off. And it's still difficult to get construction financing for a lot of smaller developers. In 21 and 22, so many people I know were becoming industrial developers.
Yeah. Well, I feel like at that time, Amazon was handing out contracts to merchant builders left and right.
Yeah. It also wasn't just industrial. It was just everyone was becoming developers. Money was so free.
But at the margin, they weren't going to be an office developer anymore. And they go into retail and they were moving into industrial. Well, some of that has washed out. And as we're into 2025 now, we see a terrific setup in terms of new supply being delivered.
I want to know, with industrial, are you guys following the nearshoring, onshoring a lot? Are you following the tariffs a lot? What are your thoughts on those things?
Well, look, it's obvious to everyone. First, we had this e-commerce wave that was clearly driving demand generically across the United States for industrial. Secondly, we all knew there were 8, 10, 12 key distribution markets in the United States that matter the most, whether it was the railroads or the ports or the highways. And so that has been going on. And that is a train that just keeps moving. You've looked at the data, I'm sure. What was e-commerce penetration rates in 2019? What are they today? Ooh, wow. That train continues to roll. At the same time, for national security reasons, for political reasons, for other reasons, our country tilted and said, wait a minute, we're going to do onshore and nearshore. And that creates a tremendous demand for additional industrial space to support a manufacturing base, whether it's in the United States or whether it's in Mexico, or whether it results in movement from Asia to other parts of the world, the role of the Panama Canal, the ports of Charleston and Savannah. And look, we're right now going through a political change in our country that, the use of tariffs are being touted as a tool for national security and for other reasons. But if one thinks that over the medium term and long term, that America's not going to see more manufacturing in this country, America's not going to have its key trading partner, Mexico, have more manufacturing. I think that's the wrong perspective. I think this trend is certainly for the rest of my career inexorable, that we're going to continue to see this. And that has an effect on where the distribution needs are. And so being a Texas-based firm, being along the border there, having sizable San Diego operations, right on the border, we're very focused on that. What are tariffs going to do? Could they, in the near term, affect demand in one of the key border or key distribution markets? I'm going to make it up. What if we have a spat with Panama that results in a serious diminution of traffic across the Panama Canal, which would affect the ports of Savannah and Charleston and New York, and that's diminished? All of that might happen in the near term. Over the medium term, I think it's obvious, and I don't think it's very debatable as to what's going to happen. So yes, we're paying a lot of attention.
Yeah, I'm sure. I've heard you talk about just your belief in the American engine and how things will just continue to grow, medium term, long term, and you're betting on it.
But we've been listening for decades now, and certainly the past decade, of the fall of the American empire and the rise of China. But look at the data. Look at how the United States is just pulled away from the rest of the world in terms of its economic vitality. Yeah. We could spend a lot of time talking about the ills of our country. That's fine. But from a commercial perspective, from a business perspective, to bet against the country, to bet against this spirit of innovation, this entrepreneurial nature, this willingness to accept failure, these things that are core to who we are as a people, I'm very bullish on it.
Adjacent to the sectors that we spoke about, is there any particular geography that you're particularly optimistic about?
We remain focused on the Southeast and Southwest because we see that, look, the key driver in real estate is you want to own real estate where people are moving to, all things being equal. Yeah. And we see that continued movement of people to the Southeast and the Southwest. Now, at one level, that's been going on since the founding of our country. And another level, I guess, maybe with the advent of air conditioning, that began to accelerate.
Right.
But today, and you know this, so many of these once tertiary and secondary cities that maybe had less appeal to young people for lots of reasons, like Nashville and Austin and Miami and Dallas. I mean, these markets are increasingly vibrant with terrific nightlives and restaurants and educational institutions and businesses moving there, and that becomes a virtuous circle.
I mean, Dallas, I was seeing, we saw 8 caps in Dallas not that long ago, really, in the scheme of things, and now they're 4.5 caps.
I think for those members of your audience or who look at the Southeast and Southwest and say, yeah, but there's land in every direction, like the supply demand, like that's a problem. Of course you need to be careful of that. But the thing to remember in all of these markets is sub-markets matter a lot. Dallas is not one big ubiquitous land mass. We all know who live there what sub-markets are attractive and what are less attractive. And so you do actually get demand supply spikes in submarkets, even though there might be land in every direction. That's different than New York or Los Angeles, where by its very definition, you just don't have supply. And so it's all about demand in those markets. Right. It's a different dynamic where the people are moving to in this country.
You mentioned Frisco, which is just a whole other beast in DFW. It's I think at one point it might still be one of the fastest growing cities in the country. Let's talk about not just industrial and multifamily, specialty sectors. You guys are doing other interesting things. I want to know, I think we talked about this earlier, how you picked different new sectors and, where you see them going. I think, solar's an example.
So let me distinguish for a moment between, and I'm not sure where to start, between our decisions in real estate and decisions in other businesses.
Okay.
Maybe just to shake it up a little bit, I'll talk about other businesses and then we'll come back to the specialty sectors in real estate.
Would love to hear it.
So we as a firm, coming out of the S&L crisis and all the things that we did, decided that we were going to diversify and never again just be one asset class. And so a diversified investment portfolio formed the firm outside of real estate. But no other operating business is formed outside of real estate. And and so we looked at diversification, not for diversification's sake, but diversification for interesting operating businesses that we could provide opportunity to people. One of the most important things to the Grow family is what I just said. How do we create an environment where we create opportunity for people to pursue their hopes and dreams and partner with them? It's very important to the family as opposed to simply just financial returns. And our operating businesses were real estate because that's our DNA and our core. But there's another tremendous secular trend going on in America, and that's the demand for energy. And no matter what you think, the demand for energy is increasing for lots of reasons in America and will for years to come. And we happen to be in Dallas, and we happen to be in Texas, which is the energy capital of the United States. And our network and our access and our understanding is enhanced by being in Dallas, Texas. And so we made a decision that we would start 2 energy businesses because we saw opportunity from different perspectives. One was we started a solar development company. It's a lot like a real estate development business. You're acquiring land, you're getting entitled. Once you get it entitled, you're building a project, you're leasing it by selling the power. There's a lot of similarities, and there's a demand for solar in America. Now, that demand clearly is being subsidized through investment tax credits and the regulatory framework, but I think that that will hold up over time, even with the Trump administration. It's nothing certain. If that goes away, it could have a profound impact on the business. It's also a very local, state-specific business. And different.
You're saying when the tax credits go away, you think it'll have if they go away?
The investment tax credit has been around since President Bush. The Inflation Reduction Act, one of the benefits of it was it made a free transferability of those tax credits, made it easier to sell those tax credits. It also added additional add-ons that if you built in a certain geography or used certain labor, you could get an increased investment tax credit. There has been noise, political noise, that the investment tax credit is under attack, EVs are under attack, the Inflation Reduction Act is under attack. And while that has not been fully resolved, at this moment in time, I believe that the base 30% investment tax credit that supports the industry will be maintained. Just in Dallas, we have 2 huge solar manufacturing plants that are being built right now. There are so many jobs in America dependent upon this industry. And so we believe that there's a demand for energy. There's a demand for sustainable energy. There's a regulatory support that will provide a financial foundation to allow us to do this. And our team is tying up dozens of sites and moving down the entitlement process as we speak. And we'd like that to be a scale business. And we expect that to be a scale business in the coming years in multiple states across the United States. At the same time, we saw and believe a continued sustained demand for oil and gas across the world and in this country. We like the fact that the largest majors are under continued pressure from investors to give money back through dividends and share repurchase as opposed to just drilling new wells. You continue to watch rig count, well count go down in America for reasons that are not related to a regulatory framework, but an investor perspective. We like the fact that many investors have exited the sector because of sustainability concerns on their end about the climate. And so there's been a non-economic reduction of capital to the industry.
The news is important, but if you're a busy real estate professional like me, you don't have time to skim through dozens of dry and ad-filled media outlets each day. That's why I read the CRE Daily. It's a free email newsletter that cuts through the clutter and delivers concise, witty commentary on the latest trends and transactions in commercial real estate. If you're a commercial real estate professional, you owe it to yourself to try it out and stay on top of what's happening in the industry. It's only 5 minutes a day. Visit credaily.com to sign up for free.
That's an interesting way of looking at it, by the way.
Well, it's true.
Yeah.
And it's no different than the tobacco industry 30 years ago, where you watched an exit for non-economic reasons and therefore a reduced supply of capital, which resulted in increased returns for those people who stayed in it.
Yeah.
I get that sentiment. I hear it a lot, but then at the same time, I feel like, every few months, or especially when there's talks that like now the administration wants to slash the prices of oil, like a farmer in the Dakotas pops up and goes, "Oh, we just found the reserve with a trillion barrels in our backyard." Yeah.
Well, it's a global demand. In the U.S. is 12 or 13% of global supply. It's a global supply demand. The United States does not set pricing in and of itself because there is free transferability of oil in the world that could be disrupted. And there's no doubt that the Trump administration, from a regulatory perspective, drill, baby, drill. But you still see oil at $72. Yeah. And there are many global market participants, not just the U.S., who are affected. If it goes from 72 to 50, that has a huge impact on countries like Saudi Arabia and Russia and their ability to support their economic objectives. And so is it possible it goes to $50? Sure. And that could happen. And if that happens, then you would say, okay, maybe I'm not going to drill the next well. But the oil you have coming out of, and gas you have coming out of the ground is still going to come out of the ground because you made the investment. And look, we find it attractive. And for those reasons, and we have a terrific team outside of Dallas that's drilling in the Permian Basin, and we're growing these two energy businesses. And that has nothing to do with the real estate business.
Yeah. That's interesting. Yeah.
Well, last thing, we've all been living through 22, 23, 24 in the real estate business, was, let's just say, haven't been the best of times because of financial reasons and otherwise. But if you had been long the energy business over the past 3 years, these have been, fabulous years.
Yeah.
And so as a business, we think that's terrific for our firm to continue to strengthen the overall financial opportunities. And we're creating all this opportunity for these new people that is so much fun to do.
Talking about opportunity, what about everyone's favorite buzzword, AI? AI and tech. Is there a future of that for Crow Holdings? Is you guys
not
doing
AI
venture
for
in-
AI's
Well,
sake.
how are you utilizing technology and AI?
I
Rather,
think we
to-
utilize technology as effectively and efficiently as any other real estate market participant.
I mean, I get you're not in the weeds, like doing programming yourself.
I'm
but
not in the weeds doing programming. Although it doesn't matter.
Tell us.
I did take an MIT blockchain class a number of years ago to understand how that occurred. Look, we have been using technology across the real estate. My entire career, it's been about getting good data, building data lakes, data warehouses, getting good data. The real estate industry suffers tremendously from the ability to get good data. Until you have good data, you can't apply AI, to your data. And so as an industry, we're still focused on, can I get good golden source data?
Yeah.
We have made a tremendous investment in that ability. We have over 600 properties in our portfolio. We have over 100 property managers in our business.
You have a lot of data.
We have a whole team in India that scrubs all of that data. They bring it into our systems, and we use that for reporting and analytical tools. As we speak, AI and its ability to look at our historical data and allow the teams through chatbots and other tools to ask questions of the portfolio and to stress the portfolio, that's all happening. I think others are doing the same thing. There are large financial investments to do it. I know the world's largest companies are, probably are a little more advanced than we are, but we're keeping up.
Yeah, I believe that. I wanted to talk about something different. I mean, we could talk, real estate specific stuff all day. And honestly, you're such a wealth of knowledge. We could probably spend hours here talking. Let's talk about something just different. How are you learning? How are you digesting news and stats and what's going on in the world? Are you listening to podcasts? Are you reading papers? Tell us how you consume.
Well, I'll tell you a little story before I answer the question. So I bet, like most people, up until 4 years ago, I had developed about a half a dozen news apps, from the left, from the right, from the center, and I would, and when I added up at the end of the day, I checked these things all the time, and I'd feel so informed, and I'm so on top of it. I'm not a day trader, so, and I probably at the end of the day, I don't know, probably hours maybe, if you really add it up from the moment you wake up to the end of the day.
Yeah.
And then I also noticed that I was just angry and irritable all the time. And it was all affecting me. And then I was like, most of it is just noise. Do you really need to know?
Yeah.
Does it really matter? Is it relevant to your life? And it was kind of making me angry and irritable. And so I got rid of all of my news subscriptions and apps at that point in time. And I migrated my content ingestion to the emails I received from think tanks that I get information from some Substack folks, some journalists that I admire, people like Barry Weiss, who I admire.
I love Barry Weiss. Yeah.
So I get content from that. I also get most of my content from podcasts.
Give us a few journalists other than Barry Weiss. Great, but who else are you? Who else are you following on podcasts? Who are?
Sure.
We already know No Cap's number one.
Yeah,
who's number two?
Yeah, what Substack? Who are you following on Substack?
Sure. On podcasts, I find Sam Harris to be a brilliant mind.
Very thoughtful.
Right.
Yeah.
And I really think he's terrific, and I learned a ton from listening to him. I think Barry Weiss's Honestly podcast is a terrific news source. I think Bill Maher is fabulous.
Yeah.
I think his real time, and then it escapes me, his daily one. I mean, he's just such a great
he's got
mind.
his podcast too. I forgot what it's called, but
there are others. Health. As you get older, you focus on your health, right?
Sure.
And there's a guy named Peter Attia that I listen to.
Mm-hmm.
We're all at some level interested in improving ourselves and different levels of self-help in one way or another. There's a terrific guy named Lewis Howes, and I think he calls it the School of Greatness, and he's got really interesting people on there. There's a psychologist, Scott Barry Kaufman, who has a podcast I listen to for, more neuroscience, psychological. On occasion, I'll listen to Joe Rogan because he's just got a
big
person.
He's a big person.
Jon Stewart, occasionally I listen to him. I want to make sure I'm getting his different perspectives, and I just.
What about business and economics and things? I mean, is it just through your network? You're just going to absorb things every day. I'm sure
it is largely through my network. I will listen to the All In podcast.
Okay.
Depends upon the content there. On occasion, someone will suggest, to me, but I don't spend a lot of time on economics or financial forecasts. I think people who try and predict these things and forecast these things and tell you the way it's going to be, I think it's largely a fool's errand. And so I don't want to spend a lot of my energy or time listening to the prognostications of where the economy is going to or the financial markets are going to.
Well, and I know Crow has its own analysts, and I was just reading a 2025, I think, forecast you guys published. So you have a lot of in-house stuff.
Every single one who's listened to this has access to the same. We're deluged with information. And I think if you spend all day feeling that you're improving and consuming, and I think you're going to look back on it and say, wow, I wasted a lot of time, man.
That's fair.
Yeah.
So that's my approach towards it.
You have any advice for people trying to get into real estate now, starting their careers, early analysts?
I think if you really, first of all, when people say they want to get in real estate, my first response is, what do you mean?
What does that mean?
Okay. I mean, there's a lot of jobs in this industry, and understanding that as a young person, doing your diligence. I mean, they have the internet and ChatGPT these days and Claude. Like, it should be very efficient for people today to understand what's the difference between a residential broker, a commercial investment sales, tenant representation, capital markets, acquisitions, asset management, advisory, lending. Until you can answer that question, or at least have a point of view, it's difficult to answer the question, how do you get a career in commercial real estate?
Yeah.
That being said, look, it's all about getting your foot in the door at an institution or organization that you believe has flow, has opportunity. I think when you're a young person, the most valuable thing is the repetitions or the chops that you get, in your career. And I think finding a place, even if it's whatever, a sweatshop, even if it's, it's not exactly, I'm not sure about the culture. I think when you're really young, experience, repetitions, getting into the marketplace, meeting other market participants. And I think a lot of young people I speak to about this question I say, well, what do you want to do in real estate? And they say, well, I want to do investments. I want to be an acquisitions person. And I want to get that analyst role at a real estate private equity firm. Those roles are generally very coveted. Mm-hmm. That recruiting goes on 2 years generally before it starts. It's generally young people from the best brand name colleges in the United States who have outstanding academic credentials. And for every 5 jobs, there's thousands of resumes coming in. And I think if you say, well, then I'm not, I don't know where to start. My response is, whoa. Are you really interested in having a career or in this industry or not? If you are, then move on and get a different kind of job in one of these institutions and prove yourself. And then if you're good at what you do and you work really hard and you care about it, the people around you are going to lift you up, or a client is going to lift you up, or a competitor is going to lift you up. But just because it may not be your first choice or pay enough money, then give up. Otherwise, keep at it and be tenacious. Finding a job is a job, and not everybody went to, whatever, some Ivy League school and graduated top in their class. I certainly didn't. I mean, I assure you, when I was going to Brooklyn Law School at night, there was nobody that I talked to that said, "Yeah, you're going to get a job in investment banking, and work for Morgan Stanley." I was like, "Yeah, good luck, kid."
Yeah.
But you're tenacious, you work hard, and I think that's the advice. And I know young people that they're looking for the silver bullet, or they're looking for, "Hey, can you give me a job?" And but that's what it's about. And I have 3 young children, who are building their careers. Finding a job is a job.
Yeah. What's some advice that you give to your own people right now, your own management team? Obviously, there's new administration, tons of stuff going on, policies changing, tariffs. It's like daily chaos, right? What do you tell your team?
Strive to be amongst the world's best. Focus on what you can control. Be good and honorable in everything that you do. Let's be strategic about our business and be patient about it. And, we're going to go out, and in any given year, we're going to have some wins and losses. We're going to do our best to make sure we have as many wins as we can. But we have some losses here or there. You have some failures in there, here or there. Look, so long as people are acting with integrity, relax and let's push forward. And that's what I tell them. Getting caught up, go back to news. Yeah. Getting caught up in this, is that healthy for anybody? The past 2 weeks have been really interesting. Whatever your point of view is, there's a lot going on every single day, right? You want to spend all day freaking out about this stuff? You want to sit in your corner and go tremble?
Do you get on LinkedIn ever and just see the chaos happening? Because it's not all business anymore. Now it's politics.
It's very,
look where I went on vacation.
It's very it's very disturbing.
Yeah.
I maintain a LinkedIn account. It's largely a Rolodex for me. Mm-hmm. Over the years, I've probably posted a half a dozen things in 10 years. And when I do go on,
chaos.
I'll spend literally no more than a couple minutes, and I'll go down and I'll read it, and it's like, that's Drek, that's Drek, that's Drek, that's Drek. I cannot believe you're posting on these political or self-aggrandizing promotional.
I'm so happy you said that.
Look at me.
Look at me, yeah. I do love a look at me influencer. It makes me feel better about myself in some regard.
It's a lot of time. It's not even LinkedIn. We spend a lot of time as people on noise that actually does nothing with respect to your ability to improve as a human being. And if you want to try and be amongst the world's best, you got to improve yourself every single day. And sitting there and doom scrolling on social media adds zero value to improving yourself as a human being. Whether people agree with me or not, that's what I believe.
I think a lot of people would agree, and you're obviously a really hardworking guy. What do you do outside of work in the very few hours I'm sure that you have to keep your sanity and keep your health up?
Well, the first thing is the health and well-being of my wife and children are the most important thing. And when that is going well, my ability to have sanity and stability is enhanced materially. And I have been blessed that they have been healthy and well, and I'm married.
That is the best first answer to that. Like, that is the best response that anyone could have. Remember that, Alex.
Remember that. I'm going to leave the two of you alone for a while. And that just allows to start. And then beyond that, I meditate sometimes. I certainly exercise and get to the gym to clear out my mind. I go for, walks, to clear out my mind. I do those things on a fairly regular basis. The things I like to do, have fun. And I'm really into the mountains and skiing and hiking and a little bit of paragliding, just stuff in the mountains. I really enjoy that. That kind of clears my head. But I'm on all the time. I wake up in the morning and I think about business. I go to bed at night, I think about business. And I guess my constitution, I'm a passionate person. If anybody works with me knows I care a lot. I'm engaged.
Yeah, clearly.
My emotions can go up and down. I try never to act out of anger. Occasionally it happens. But overall, I've been blessed with a constitution that's given me a fair degree of, just call it emotional stability, for lack of a better word. And that's my response to your question.
Well, Michael, the truth is we could talk to you for hours. You're just, like I said before, you're a wealth of knowledge. And we could talk just real estate for weeks and weeks and weeks with you. I wish we had more time, but we're running up. Seriously, thanks so much for coming.
Yeah, we're very thankful for having you on. This has been great. I've loved the discussion we've had, and I'm excited to have you on again.
Yeah, great seeing both of you guys. Thanks for the opportunity. I appreciate it. And good luck with everything. This is a terrific podcast, and it's wonderful to see you guys building this and growing it.
Thanks for saying that.
Appreciate it.
Thanks, Michael.
All right, guys,
Thanks.
take care.